Hello, and welcome to the Power Your Advice podcast. The Power Your Advice podcast is designed to bring financial advisors new ideas, why those ideas should be considered, and how to implement them into your business. This podcast is brought to you by Advisorpedia, the best place for advisors to grow their minds and business. This is your host, Doug Heikkinen. And today we welcome Michael Freedman, who is the CEO of Lighthouse Life Solutions. Lighthouse Life is about selling your life insurance policy for cash. Welcome, Michael.
Thank you, Doug.
Tell me about Lighthouse. How did you get here? You've been in the industry for a while, and here we are.
Well, thank you again for having me. Lighthouse Life is a company that buys life insurance policies primarily from seniors. As you said, I've been in the market for nearly 20 years. We think it is an incredibly valuable tool for insurance producers and also financial advisors to be able to help their clients access the value of their life insurance policy when they're no longer going to keep that policy. And that's what life settlements do. We started Lighthouse Life 3 years ago. We're about to celebrate our third anniversary, really as a way to grow the market, grow market awareness, and to some extent disrupt the way the market has operated for really the entire time that I've been in the life settlement market, which has been highly intermediated. A lot of hands in the way to get a policy, for a policyowner to sell their policy and investors to buy those policies and aggregate those policies. So our company is focused on originating those assets by advertising and marketing to consumers directly and working directly with financial advisors and insurance producers to help their clients access that value. So that's what really gets us to where we are today, is to be a growth company, a disruptive company, and delivering value both to consumers and to investors.
Let's set the table here. What exactly is a life settlement?
What is a life settlement? A life settlement is the sale of an in-force life insurance policy. And just think about it this way. People take out insurance for all sorts of reasons. Maybe sometimes in their 20s because their cousin is selling insurance, or 30s because they're starting a family, and 40s because the kids are getting older and getting ready for college and through college years. But there comes a time in the ownership of a life insurance policy that almost inevitably individuals are going to be faced with what to do with that policy. Should they keep it? Can they keep it? Can they afford to keep that policy? The reasons they took it out have changed. Kids are grown up. Sometimes they're not so grateful, so I want to keep this life insurance policy. And oftentimes because of financial reasons. Life insurance policies become more expensive as people get older, and people's ability to afford those policies are challenging in retirement on a fixed retirement income. So when somebody doesn't want that policy any longer, they typically think about dropping insurance. That's the lexicon that we use in insurance, whether it's your auto insurance and homeowners or your life insurance, you drop it. But with a life settlement, you can shop it. You can get the best value for the policy through a life settlement transaction. And life settlements pay policy owners significantly more than they will get if they lapse the policy, in which case they get nothing from the insurance company, just walking away from it. Or a surrender, they get the cash surrender value, which is usually very depleted and a fraction of what it might have been, and also well below what the value or the premium might be for that policy. Two national studies have looked at the life settlement market over a long period of time and shown that policy owners receive 4 times to as much as 10 times more than cash value. So it is the sale of a policy for more than its cash value. It delivers value to seniors and their families in retirement who are trying to achieve retirement goals, or sometimes to just make ends meet. And that's really what the life settlement is.
Our industry tends to slap labels on things, sometimes unfairly. What are the myths and realities of a life settlement?
Well, I think one of the biggest is that I'd say it's predatory, taking people's life insurance policies away from them. And the reality is, that's the myth, and the reality is that more than 9 times out of 10, individuals are going to lapse or surrender their life insurance policies. Less than 1 in 10 policies that terminates pays a death benefit. They usually terminate in lapses or surrenders. So they're getting nothing or next to nothing. So we're not predatory at all. In fact, what we are is an opportunity for people to access the value of an asset that they created when they took out the life insurance policy and that they gave value to year after year through premium payments. So it gives them the ability to access that. When you walk away from a life insurance policy, you're giving the value that you created to the insurance company. And all you're doing is asking the insurance company to honor the contract. Every life insurance policy has a right of assignment in it, which includes its ability to be sold. And in fact, I'll put on a little bit of a lawyer hat for just a minute. In 1911, the Supreme Court unanimously held that life insurance is, quote unquote, ordinary property, and that part of its value as property is its ability to be resold. Supreme Court said if you can only sell it to a limited number of people, it would be worth less than if you could sell it in an open market. So the reality is that people can get a good value for something they're not going to keep. And I think that's probably one of the biggest myths. And the other is that there is no regulation of this market and that it's a Wild West. That's something we hear quite often. It's not a Wild West. The fact of the matter is that this is a highly regulated transaction. As we know, insurance is regulated by state insurance departments. 43 of the 50 states have laws regulating the transaction that provide consumer protections that exceed any other financial service transaction that you can, particularly for seniors, that can be accessed in the market today. Those consumer protections include the fact that we as a company have to be licensed in each state we operate to buy the policies. And just think about that for a second. What do you have to be licensed to buy in this country? You don't have to be licensed to buy a car. You have to be licensed to drive it. You don't have to license to own a gun. You have to register the gun. You don't have to be licensed to buy a home or stock. But to buy a policy, we have to be licensed, which subjects us to insurance regulatory form approvals, to investigations and examinations, to other requirements that really protect the consumer. And one of the most strong consumer protections, because we're dealing with a senior population, is that we are required when any individual sells their own life insurance policy that their doctor has to provide a certificate of competency to us to buy that policy. So again, if you were thinking about any other transaction, to sell your own life insurance policy or to sell you have to have your own doctor say you're of sound mind. And that protects seniors, and we like those forms of consumer protections. And as a result, this life settlement market, which is highly regulated throughout the United States, there are no reported consumer complaints being received by insurance departments. There is no litigation pending on consumers selling their policy. There is no legislation pending and no regulation pending. This is a well-settled, well-regulated market that should give consumers as well as their advisors confidence, not the idea that it's unregulated in a Wild West, but you're dealing with people who are accountable, who are required to meet standards and do so in a way that provides the value to seniors without any harm.
How can financial advisors get their heads around this for their clients?
Well, I think it's a great question. The market is very small. It remains small. In 2019, the last year that data were available, there were less than 3,000 life settlements done through the whole United States, accessing about $4.5 billion of death benefits. And if you do the quick math, that means each transaction was about $1.5 million. So it means that a lot of people aren't accessing the market. Every single year, millions of life insurance policy owners are dropping their life insurance who could have sold their policies, who are 65 and older, 70 and older, who've had a change in their health. I mean, there's some real untapped. This market is significantly untapped. So financial advisors should think about this transaction of life settlements as a tool in their toolbox to help their clients who aren't going to keep their policies to find out first, does it have a value? Is there a secondary market, a life settlement value for that asset that they're not going to keep or that becomes a challenge in next year or the year after next? So for them to access the market for their clients is to say, let's just get it appraised. I mean, even if if grandma dies, you appraise the jewelry. You don't just give it away. You don't just give it back. and don't see what it's worth. So the idea that having an appraisal service, which is what a life settlement company like ours is a way for the advisor to help their client maximize the value of the asset. And then what happens if it does work, if it does make sense, if it's the right thing to do for their client, they're getting significantly more than the cash surrender value, or significantly more than zero if it's a term life or a lapsed policy. And that's money that they can help reinvest with their client to help meet those retirement objectives. So what advisors should think about life settlements as a way to help their clients maximize the asset value for an asset that oftentimes, and I make this comment quite often, they're sitting at home going, how do I make ends meet? Right behind them is a file cabinet. In that file cabinet is a folder. It's got a life insurance policy that could have more value than the equity in their own home. They just didn't know it. Mm-hmm. So recommending their clients get an appraisal and helping their clients with an appraisal is the best thing that they can do.
Do you spend a lot of your time educating clients and financial advisors exactly what this is and how they can do it?
Yes, we do. We spend a lot of time on the myths versus realities. Mm-hmm. We also spend a lot of time, each the way that we understand the market, it's like looking at a jewel under a jeweler's lens, is that it's not cookie cutter. Each policy is unique. The health and the life of the insured in the policy is unique. Their needs are unique. So there's a lot of time spent collecting information, and I'll talk a little bit about what's needed. But helping them understand the transaction, helping them understand what we need, and getting over some of those humps of resistance or misunderstanding, I should say, the myths that we were talking about. So that really is we do spend a lot of time. But again, I think it's growing in awareness and acceptance, and we're continuing to see growth in the market.
You mentioned talking about what is needed. So
yes,
what's needed?
Yeah, that's kind of my way of prepping the question. So when the life settlement market is traditionally and typically a senior-focused market, because the way the transaction works, there's an investor who's going to buy the policy and hold that policy to maturity for the life of the insured. And so it's really focused on 70 and older. And in most instances, there should be a change in the insured's health from when they took out the policy. If they would still be rated as a standard from when they took out the policy, they were standard or preferred, and they're still standard or preferred, there's not likely to be much of a value until the older years. So if there's a change in health, it could be diabetes, it could be cancer, it could be cardiovascular, other things that happen, obesity, where there's a change in health, that really creates the ability for the investor to present the value that is worthwhile and significant. Not all cases are like that, however, because there are programs, and Lighthouse Life works with one program, which allows for healthy lives, for people who are 75 and older, who don't have any change in their health, and therefore it's a very simple process for them to be able to access the market. So, but generally speaking, it's somebody 70 and older with a universal life policy or a term policy that's convertible, who isn't going to keep it, who might have had a change in their health. At that stage, that's when you get involved. You get a life settlement company involved to get it appraised.
So you said you were celebrating your third anniversary. So things must be going very well, and word must be getting out, and you're doing great.
Well, we think so. We think we're heading in the right direction. Our company, Lighthouse Life, has a program specifically tailored for working with financial advisors. As we've seen the move to fixed fee, business and not commission-based business, when we've seen more Reg BI and fiduciary and suitability standards being imposed, life settlements meet and our program meets all of those concerns. Our program provides for suitability checklist for policy owners to complete. additional disclosures for the financial advisor and the broker-dealers to be able to get comfortable that their client knows the transaction and what they're dealing with. So we are growing in our relationships with financial advisors, again, being an appraisal tool and giving then those firms and those advisors the ability to get the appraisal from us, and then if it makes sense to sell their policy, to have the life settlement proceeds be reinvested. So it's a good program that we're seeing a lot of success. And it's one in which more and more broker-dealers are saying, hey, in this age of an environment, it makes sense for us to make sure that we're giving recommendations that are suitable and in the best interest of our clients, even if it's a life insurance policy that may not be under Reg BI, but makes sense to give consumers that are the information about this market.
What's the best place for advisors to go to find out more about you?
Well, thank you. They should go to our company's website, which is lighthouselife.com. And they can access, we have a tab for advisors to access more information about our program. We have actually a quick appraisal calculator that's going up online in the next 2 or 3 weeks to help just at least get some initial sense of whether these policies make sense to go on with the further appraisal and potential life settlement opportunity.
Michael, thank you so much for joining us today. This is fascinating, and I wish you the best of luck.
Thank you so much, Doug. Thanks for having me.
For everybody at Advisorpedia, our producer, Jakey Beard, and the Power Your Advice podcast team, this is Doug Heikkinen.